Yeah, 2ppoptionmillionaires.com, June 6, 2016. It's a Monday. S&P 500 futures are up 0.25% here to start the trading week. That 2100 level remains the line in the sand, folks. And if you look, we broke above it on Friday, heading into the jobs report, looking rather robust. 2105 jobs report came in, could not hold the 2100 level. We are now above it. We are almost back up to those highs that we saw just before the jobs report. 2100. Even last week, we were just messing around with 2100 all week long, and each time we tried to break above it, the market pulled back. But if you look at the action, every single dip was bought starting on Tuesday. And Wednesday, we had a nice dip right out of the gate that was bought. We had a dip on Thursday. That was bought. And the biggest dip of the week on Friday after the jobs report, nice buy at the dip opportunity. Market almost reclaimed all those losses. And we'll see if we get that action when the opening bell rings. If you look, that 2100 level, yeah, why is it so key? We'll go back a year. Exactly a year ago, where were we? S&P 500 right around 2100 1 year ago. So despite all of this action that we've seen over the last year, the market has gone no. And then if you look where the action really started to get nasty last summer, 2100 level, late August, that's where we collapsed from. Where did the recovery rally end at? 2100 in November. That instigated eventually a move that we have not seen to start a year in the market's history. We had a nasty start to 2016. Recovered those losses off the February lows. Where did the action stop at? 2100. We pulled back down from there. Now we're back at where? 2100. That's why it's so key here. The market can get and hold above 2100 will be really, really strong support here heading into the summer months, and something that would be constructive for a move to new all-time record highs for the market again. What was former weakness that we've seen throughout the last year could ultimately be really strong support here for the market going forward. So that's the line in the sand to watch. If you look, crude oil is now at new highs. You can see the breakout really consolidating over the last couple weeks. Starting to break out, get over the $50 level, and resistance here on a short-term basis, just another 50 cents away. It could really launch crude oil, which is going to lift energy. So let's get into some ETFs real quick. First, John Deere, which Goldman Sachs, I believe, upgraded this weekend. You can see it coming to the underside of former support, now resistance break above that. We're going to see the 90s, which, if you look at Caterpillar, could also help Caterpillar shares here as we see Caterpillar up against support, a possible move up to 80. But if you look, energy, if crude oil continues to rally, you can see the breakout from the downtrend. We broke the trend line, and now nice flag pattern, bull flag continuation over 70 possible. So that's something to look for along. The one ETF to watch here, financials, and I think this is going to help determine where the market's headed here in the short to medium term. Look at XLF, has not broken out of that downtrend, but once, if it does, let's just say if it breaks above it, it's going to really help set the market up for that move to record highs. This, of course, is going to be a tough nut to crack, and if we do not break above it, we're going to see a test here just under 20 of support, and that's going to mean the market's probably going to head significantly lower from where it is right now. You look at the S&P 500 ETF, the spiders, we are breaking out here of long-term trend line of this channel, and if you can see it here, we're just to the top side of it. And on last week, the jobs report recovery got us over. You can see we dipped below it, and earlier in the week, last week, we saw again a dip below this support line, but it held. And we've seen this previously with the S&P 500. The 204 level was a springboard for gains. So look at last week's action. Despite the swings, really just a consolidation. Is a consolidation for a move to new all-time record highs? It's a distinct possibility. We have IWM looking rather bullish. If you look, has been really outperforming the last couple weeks, and you can see it's broken above. These two trend lines came together. This is the downtrend from all-time record highs, and this is a long-term trend line support. Came together, and look at the breakout we've had for the small caps. Resistance up here just under 120, so that's a line in the sand to watch going forward. And look at the NASDAQ, the QQQ, looked like a nice head and shoulders pattern. Negated that, broke above this downtrend line here. We broke above it. This is now support, setting up possibly for a move to 115. So keep an eye on those here going forward. Consumer staples just continue to really outperform if you look from a long-term chart perspective here. 5-year chart, you can see the consolidation. Looks like a nice bull flag for a continuation to the upside. A couple other stocks to watch. How about McDonald's? Beaten down after hitting its record highs. You know, I'm somewhat sarcastic on it because really since its all-day breakfast menu breakout 24 hours a day, it's been up almost 30%. So pretty miraculous rally there for McDonald's, but support is pretty close here at 120. Expect to bounce up to 125. Couple other charts to watch. We have earnings from Restoration Hardware. And if you look long-term perspective, 10-year chart, if you draw a trend line across, these I just have not changed them since, who knows, back in 2012. But if you look trend line support from 2012 all the way across, that sets us up for possibly a bounce for Restoration Hardware heading into earnings, I believe Wednesday after the closing bell, looking to trade for a possible move up to about $40 to $36 calls, or $1 or $1.20, something like that. So it's a pretty inexpensive trade for a move to the upside. Yeah, and I was going through some charts this morning. Some of my annotations kind of stick around. Forget that one. I guess I was pretty disappointed some of the action there back in 2009 for John Deere. Finally, the last chart. We bring this up all the time just to look at the really beat down VXX intraday. Great indicator, but this morning is down under 13. It's at 1288. You can see the action tried to hold over 13. This looks like reverse split is coming again for the VXX. And finally, let's do GDX, because what a breakout. Gap and run we had for the gold miners. Gold was up big on Friday after the jobs report. And I was looking for this trend line break. Did it happen? Did it happen? Wow, we're getting close. If you look, the move up that we saw off the lows in February got us up. We more than doubled. Got us almost exactly to this long-term trend line that I've been watching for many, many years. And finally, we got up to it, and it was rejected, but we're working our way up here. We have this gap. Possible resistance, again, will lie there at just over 26. All right, UPBOptionMillionaires.com. The opening bell's coming in a couple minutes. I'll see you in the chat room at OptionMillionaires.com. Everyone have a great day. Goodbye.